Except for utilities is a big deal. How about this? Will there be an average operating expense ratio with the owner paying utilities versus the tenant paying utilities? And that's a number in your town that you would know. So let's say these numbers are correct. So here's our friend Janet. We say, Janet, you ought to buy this thing. Well, now, shouldn't she and isn't she going to estimate those 4 financial benefits? Well, the first benefit is cash flow. Look at Roman numeral 1, cash flow before tax. How do you figure your cash flow? Well, let's just follow the worksheet. It says, what's your gross operating income? Well, what is our gross operating income? $20,577. So just repeat that number right there. $20,577, and then look, the worksheet tells you what to do, minus the operating expenses, which are $7,812. So put that $7,812 right there. Now somebody make that calculation. $20,577 minus the $7,812. What is $12,765, and we call that her net operating income. Put a little star by the net operating income. The net operating income is the center of the universe. Everything else is just kind of planets revolving around that net operating income. The net operating income is the amount of money Janet would have in her pocket at the end of the year if she bought the building. How? Cash. Right? If Janet came along and said $130,000, no problem, and she wrote a check for $130,000. Well, at the end of the year, she'd have $12,765 in her pocket. But she's not doing that. Janet's coming along saying $130,000, okay, but I'll give you $18,000 cash and finance the other $112,000 like this. So the next thing she has to pay out of that net operating income is her what? Her debt service. What does debt service mean? Fancy words. What's it mean? It's just your principal and interest payments times 12. Well, what's her debt service in this case? $945 a month times 12 is $11,340. So let's put that $11,340 right there. So it says net operating income minus the debt service equals the cash flow before tax, and that's $1,425. She's got $1,425 of cash flow before tax. What do you think? Is that good? What do you think? $1,425 cash flow, good? Well, it's better than $1,325. Right? Not as good as $1,525. It's better than negative. How many of you know people own a building like this where this number is a negative number? How many of you know people own a building like that and they want that number to be a negative number? No, you do not. Put your hands down. Nobody in this room knows anybody who wants that number to be negative. Those people would not be allowed loose on the streets. If this number was negative to Janet, what would it mean? She'd be losing money. Whose money? Her money. What kind of money? Real money. Nobody wants to lose their own real money. If you want to lose your own real money, folks, there's a lot easier ways than this. What people want is to make money, but tell the IRS they're losing money. And is that a whole different thing? And is that possible? Is it possible to make money and tell the IRS you're losing money? Is that legal? Yes, that's legal. What a country. In this case, $1,425 cash flow. Now, you show this to Janet. You say, Janet, come on, you got to buy this thing. Are you kidding? What's she going to say? Real world. Isn't she going to say something like, come on, you want me to put $18,000 of my hard-earned money into this, worry about it all year, I end up with $1,425? I could put the $18,000 in the bank and I could do that well, and I wouldn't have to worry about a thing. And you would say to her what? Well, you would say, Janet, that $1,425 is only the first benefit. She says, I don't even want to hear the rest, you know, if you're starting with your good stuff. Now, we might decide the deal's good or bad. We just need to decide it's good or bad based on all 4 benefits. True? Please don't judge it by any one of these. Is she at any financial risk here? Janet, at any financial risk? None. When is she doing this? When is she doing this? Before she buys the property. Janet, you haven't even left your kitchen table yet. Don't tell me you're in financial jeopardy here. The time to do this is when? Before you buy the property, before you list the price. She hasn't even looked at the property yet, you see. $1,425 in cash flow. Instead of a $20,577 cruise around the world, could she end up with a $1,425 weekend in Decatur? Yeah. You could get a week in Decatur, couldn't you, for $1,425 now? Come on, I've been to Decatur. All right, so that's the first benefit, but we got to keep going.
What you just watched is one small section of my investment real estate seminar. In the full seminar, I show you how to use the investment property worksheet to analyze the 4 financial benefits of rental property. Those 4 financial benefits are cash flow, principal reduction, income tax savings, and depreciation. The beauty is you can do all that analysis before you buy to make sure the property makes financial sense and you're not paying too much. In this section, we dealt with how to determine your cash flow before tax. Be sure to go to my website, howtoinvestinrealestate.org, for some great information about how to calculate each of the remaining benefits. I promise you'll learn something and maybe even get a few laughs. If you're already on that website, keep reading and we'll move on to the next topic.